Great. So, good morning, everyone. My name is Caleb Jennings with the Cams Jennings Group of Compass Mortgage, and I'm with my partner.
Hey, I'm John Cams. Nice to meet you guys.
So, we want to welcome you to our webinar on VA loans. And essentially, we decided to do this because millions of veterans in our country are eligible for a VA loan benefit. And unfortunately, they aren't aware of that. And what's sad about that is that they've earned this benefit, and it's one of the best loan products you can have out there on the market. So we thought, this month being November, which is a month that we give thanks. We just had Veterans Day last week or on the 11th, and then tomorrow is Thanksgiving. So we really thought we wanted to, one, share some information about the VA loan on this webinar, but also two, just we want folks to spread the word. If you know a veteran, to make sure that they know about their VA loan benefit. So to open it up, we thought we would just talk one simply about like what are the benefits of a VA loan. So simply put, a VA loan, you don't have to have a down payment. So that can be a huge factor. I think, John, when we look at that, if you want to talk about like the VA loan for folks, when we say no down payment, what does that mean? Just as simple as.
Yeah, it's no down payment. So typically, if you're not doing it before the Great Recession or 2008 and the mortgage crisis, you used to be able to do 100% financing. But since then, the VA loan right now is the only loan available where you don't have to put any money down. If you were to do a standard conventional loan or an FHA loan, those minimum payments are 3% and 3.5% respectively. So that can be, if you're buying a $300,000 home, you could have to put a full $9,000 down, where if you're a vet, then you wouldn't have to put any down.
Yeah, no, that's awesome. I mean, that's amazing, right? And I think that a lot of folks don't know that. Now, I also know that when on a typical mortgage, if you don't put 20% down or more, you have to pay mortgage insurance. So what's the case with a veterans loan, John?
So that's another benefit that the VA gives to the vets, is that it's a zero. Not only is it 0% down, but there is no PMI on top of it. And when you do an FHA or a conventional loan, especially with the lower down payments, the PMI can be very expensive. So PMI can be right off the bat on an FHA loan is 0.85% of the loan amount divided by 12. And you do the math on it, you'll see that it's expensive. And then conventional has like a sliding scale for PMI. So just to put it shortly, it can say that no PMI can save you a lot of money, especially when you're below like a 700 credit score.
Yeah, and so no down payment and no mortgage insurance. So basically all you're paying then is on the principal and interest of the loan and your property taxes, which is awesome. And so as far as the guidelines,
and your insurance, your homeowner's insurance,
and your homeowner's insurance, yeah.
Yeah.
With the VA loan, the guidelines as well. Can you talk a little bit, John, like what they look at for credit and debt to income and what
Sure.
have you?
Yeah. So the Veterans Administration guarantees these loans. So they come with loosened guidelines. So with a standard conventional loan, you're going to, rule of thumb, be 45% debt to income ratio. So you could be you could easily not qualify for a conventional loan, where if using your VA benefit, you could qualify for the same house with better options, no PMI, 0% down. Then you also have lower credit score as well. So a VA loan, typically 600, even as low as 580, you can get done. Where with a conventional loan and even an FHA loan, oftentimes you'll find that if you have a 600 and you're not around peg and around hole, you're not getting a loan. So it does really both, where the Veterans Administration guarantees these loans to loosen up guidelines so that vets can get into homes. It's one of the things our government actually does that really does it really is a huge benefit to veterans, and so everybody should utilize it if they can.
No, absolutely. And that's the thing that like just blows my mind, that there's millions of veterans out there today that are eligible for this benefit and they don't even know about it. So I think,
Mm-hmm.
again, to thank a veteran, let them know about the benefits they've earned. So on that, no down payment, no mortgage insurance, lower interest rate, you can have a higher debt to income ratio, and you can also what was the last piece? Lower interest rate,
Lower credit scores.
lower credit score. So it really is, if you're a veteran that qualifies, this is an amazing program for you. So let's talk about that. So I'm a veteran, or how do I know if I qualify for this, John? Just like for the VA loan benefit.
Yeah. So we can go over you've got the service requirements, the general service requirements, but ultimately what you do is you get us your DD 214, and then we take that DD 214 and we pull what they call a certificate of eligibility, also known as a COE. And then that COE is going to tell us whether or not you qualify, and then also what your funding fee is. So not to get in too much into the woods on this, but when you do, the reason the Veterans Administration will do lower down payments is because a lot of these loans come with a Veterans Administration funding fee, which is financed into the loan. But I know, like, if you're a permanently disabled vet, then they waive that funding fee. But we won't know what your funding fee is. And again, the great news is you don't actually have to pay this out of your pocket. It's financed into the loan nine times out of 10. So, but the certificate of eligibility is really going to do two things. Number one, ensure that you do qualify and you are eligible for a VA loan, and then also what your funding fee would be.
Okay. And so, yeah, and one of the things on the certificate of eligibility, just to get into some of the specifics, is to qualify, it would be one, you've served 181 days of service during peacetime. Two, you've done or you've done 90 days of service during wartime, or you've done 6 years in the reserves or the National Guard. Also, if you're a surviving spouse of a veteran, you could qualify as well. So again, millions of veterans out there don't know about this. We want to spread the word about it. This is one of the best loan products on the market. No down payment, no mortgage insurance, low interest rate, except a lower credit score, higher debt to income. And if you qualify, you should definitely utilize this benefit. So anything else to add on this right now, John, or
Yeah, I wanted to elaborate a little bit on the lower interest rate. So just to quantify it. So if you were doing a conventional loan right now and only putting 3% down, I'd say probably 2,625 to 275, and you'd have a pretty sizable mortgage insurance payment. Where with a VA loan today, you'd be at 2.25, 2.125, and you'd have no mortgage insurance. So it is very substantial, and again, it's one of the few things we actually do for our vets that I believe really is a huge, tremendous benefit.
Awesome. So I don't know. Go ahead.
Yeah, we have a couple questions that are coming in here. So this first one, it's a little longer. So it says, do VA loans have tiered APR based on FICO? Yes, the applicant qualifies, but will their rates be lower if higher FICO? Is their rate lower, similar to conventional?
Everything's case by case, but it's not nearly as dramatic as a conventional loan. So a conventional loan, absolutely, like the difference between a 720 with only putting 3% down and a 680 with putting 3% down is tremendous. Where VA and FHA tend to be more pass fail, and if there is an adjustment, the tiers are not nearly as dramatic.
Okay, great. Thank you so much. The second question we have is, what is the approximate cost for the funding fee? Can it be paid outright versus being financed?
Yeah, so the funding fee can be upwards of, I want to say 2.7% all the way down to 0. And yeah, you can pay it out of your pocket. I don't really ever recommend it when you analyze the fact that if you're paying the higher funding fee and the interest rate's 2.25%, I don't know where you're going to get a 2.25% interest rate for 30 years. It just doesn't exist. So usually it makes sense to finance it. Now, if it's a purchase though, and you can negotiate to have the seller pay it for you, then that's something that should definitely be explored. But more often than not, if it's versus you actually having to pay it out of your pocket versus financing it, I think financially it makes more sense to finance it. But yeah, you can pay it out of your pocket, and again, the determination of that funding fee is going to be based on the certificate of eligibility.
Great. And we do have another question that just came through. It says, I've heard of several programs that offer grants to Illinois veterans to help cover closing costs. Can you speak to that?
Do you want to take this one, Caleb, or you want me to?
Go ahead, John. That's fine.
Okay. So yeah, we offer all of the Illinois down payment assistance programs, and they're great programs. The one thing I would say is that usually they're great programs for people that actually need them. So if you're somebody who we say, hey, the only way to get you into this home is for you to utilize this program, then they're absolutely great. Oftentimes we find though that there's no free lunch, and the alternative, if you don't need it, is usually way more attractive. And there's a lot of ways to structure it where we can get your closing costs paid for without having to do a down payment assistance program. And the good thing about us is that we'll actually, I know that at least I feel like a lot of times in our industry, it'll be like get you in the door with one of these down payment assistance programs and then pigeonhole you into it just because it's easy, where we're going to actually take the time to say, hey, do you actually need this program? And if you don't, let's explore what it looks like without it. And ultimately you decide, but oftentimes it can be a lot more attractive than utilizing it, and we still get your closing costs paid. So.
Great, thank you so much. We have another question that came through here. What percentage of your loans are VA?
So, I mean, that's a good question. I have to look at that. So, I mean, we, the Cam Jennings Group of Compass Mortgage, we do quite a bit of VA loans every year. I don't know off the top of my head what our
under 5%. We know them really well because we've done so many of them, but it's not hard. We do, there's not many veterans. If you take a sample 100 people, how many of them are veterans? So, but we do a lot of them. So I would say under 5% though, but I've been doing this for 18 years. So doing 5% of my business FHA for 18 years, we've done tons of VA loans.
Great. And then another question, a couple other questions. Do you want me to continue with the questions, Caleb and John, or did you have something else you wanted to introduce?
Oh yeah, please, let's do the questions.
Okay, great. So our next question is, do you do loans outside of Illinois?
Yes, we do. We're licensed in, you can look at our website, we can show you, but we're licensed in Illinois, Indiana, Wisconsin, Tennessee, Georgia, Ohio, Michigan, California, Arizona, Texas,
Florida.
Florida. Yes, so the short answer is yes, we do them in other states, and we can help you out.
Wonderful. And then our next question says, federal protections on evictions and foreclosures expire at the end of the year and the first few months of next year. Would you anticipate more property on the market after that, / better deals, etc.?
That's hard to tell. I mean, I think that it's hard to speculate on that. I think that ultimately right now we are in a low inventory market in general, and it looks like it's going to be that way for some time unless there's new construction that comes on. So it's hard to tell. I think ultimately though, right now is the best time to buy, period, because interest rates are at historic lows. Like right now, your buying power is the best it's ever been. And especially if you can get a VA loan, we're looking at interest rates that are super low, that right now you could buy a lot more house for a lot less money than you could have just a year ago. So I wouldn't sit back and wait to speculate how the housing market, like all that stuff. I would, if you can now take advantage of these historically low interest rates, do it now. This is the time.
Yeah, I would say too that nobody can time the market. A lot of people think they can. A lot of people pretend like they can. But when you buy a home, it's a long-term investment. So I usually tell people that if you're going to buy, a good rule of thumb is that you're not going to do anything for 10 years. You're pretty sure that you're going to stay put for the next 10 years, or at least be prepared to stay put for the next 10 years. Because unequivocally, usually a 10-year period, the longer the term, the less the risk. So trying to wait 4 months to time the market and then find out that the opposite happened, the interest rates went up, and then they extended the forbearance and the eviction, which I wouldn't be surprised if they do. And then now, yeah, I mean, you're better off nobody's going to time the market, and anybody who tells you that they are is I don't know about you, but I've never seen anybody that can consistently predict the future. So, and it's always a good time to buy if you have a 10-year horizon, or you're prepared to hold for 10 years.
Great. Next question is, can VA loans be used to buy a home with land?
VA loans with land. You think that they're like?
That's a great question. I believe you can, but I'd like to actually get back to you guys on that. VA has a lot of bells and whistles, and the last thing I want to do is tell you we can do something that we can't. So we'll definitely make a note of that and send everybody an email.
Great. So Michael, we'll get back to you on that question. Next question is, what's typical DTI for veterans?
Yeah, it's kind of all over the board, but typical DTI just in general would be anytime you're getting over 50%, would be something that I would tell you, hey, you need to talk to us. We need to. There's an automated underwriting system behind this, which, for lack of a better term, is a computer. So a computer is going to basically say yes or no, and this computer is a machine that, like, we don't really control. It's either yay or nay. They will go over 50, but I would say rule of thumb would be that if you're over 50, then you need to talk to us. I'd like to run it through automated underwriting, get all the details so that we can ensure that, yes, in fact, you do have a 53% DTI and you are approved.
Yeah, I mean, I think the reality is we've closed loans at 55% DTI in veterans. It's case by case, and I just think, just in contrast to a conventional loan, we typically can't go above a 45% DTI, where a VA, we can get it done at 50 and even sometimes more. So we just need the first step would just have us do an analysis of it, really look at it for you.
Great. Caleb, is there anything else you wanted to cover before just a few final questions?
I think no. Any other questions? Let's take those.
Okay, great. So what would be the cons to doing a VA loan?
Oh yeah, I mean, I think just some of the cons would be, one, this is a primary residence. You cannot use a VA loan as an investment loan, so you have to own or occupy as a primary residence. Two, I would say that the process can be, there's a few more steps in the process. So sometimes the closing, when we say 30 to 45 days, we're going to be definitely more on that 45-day on a VA loan typically, because when you get an appraisal for a VA loan, you're going to get a VA inspection, and they're a little bit more rigorous, so they can take a little bit more time. And sometimes they can create some challenges where they'll say, okay, this property needs XYZ needs to be repaired before we're going to say that this can go VA. So that can be a challenge at times. What else? Anything else you'd add, John, to
I would just say there's a lot of myths out there that sellers and realtors and even borrowers here that will sometimes get in the way of you getting, like, you'll randomly see on the MLS, like VA, FHA loans not accepted, and you'll have agents that, and usually if it's an agent that knows what they're doing, it'll be because there's property issues. But I've run into it where they're just like, oh yeah, I heard VA's a pain. We want to sell fast. And it's like, okay, well, the property is completely fine, and its VA loan is not a pain. They're actually really easy loans if it's a round peg and a round hole. So oftentimes though, you could fall into like, these myths preventing you from utilizing your VA loan that if you contact us, we can hopefully get around for you.
Yep.
Great. Our next question is, what about veterans that filed a Chapter 7 bankruptcy? And then kind of a follow-up question to that is, after that Chapter 7, how long after it was discharged can a veteran apply for and get approved for a loan?
Great.
Yeah,
I know that FHA is 2 years. 2 years if it's Chapter 7, 1 year if it's Chapter 13. And I believe the VA, that's another one, great question. I'd like to get back with you just so that I can get you the accurate information. But I think it may be less of a requirement, but let me confirm precisely what that would be so that I don't give you the wrong information.
Okay, next question. Is there a benefit to using veterans-only banks like USAA?
Oh, that's a good question. I think, and often we get veterans that maybe they bank with USAA and they've done their business with them as well. And USAA has done, like, I'm using them as an example, I guess, is they've done a lot of marketing, like they market their niche as veterans. But what we found, unfortunately, is that they're not always the best at the best deal for our veterans. And we've gone head to head with USAA on interest rate, for example, and we beat them every time. So I think that we encourage our veterans, don't just because you go to like a veteran credit union or a veteran USAA bank, like make sure you check with us, because all we do is mortgages. And what we're finding is we're actually kicking their butt all day on interest rates and costs. So you should definitely make sure you check in with us.
All right, I think that leads us great to our final question for today, and that is, how can I get started with you guys?
Yeah, no, I think, the first step is to reach out to us. You can either call us on our team line, 402-882-5626. You can email us at our team email, kjg@compmort.com. Or if you're watching this, we're going to be sharing this on Facebook and on Instagram too. If you're watching this on social media, you can just direct message our social media platform. We'll follow up with you right away. We really want to give you an opportunity to learn more about these benefits, and we'll schedule a time to give you a consultation.
Wonderful. Thanks so much, Caleb and John. We are going to finish up our session here today. Thank you for joining us on this rainy Wednesday, and we hope that you all have a really happy Thanksgiving.
Thank you. Thank you, everybody.
One more thing, Tara. I just want to say thank you to all the vets out there for all that what you've for our freedom.
Thank you.
Yes, thank you so much. Have a good day, everyone.
Bye, guys.